From Daily Forex, this is Chris taking a look at the S&P 500. In my daily analysis of the S&P 500, it's worth noting that we had a significant miss in the consumer price index numbers in America, and we have seen absolute panic since then. That being said, we are starting to see a little bit of support near the 5,600 level, so I think this is going to be a short-term pullback that eventually gets bought into. After all, Wall Street will come around to the idea that interest rates are going to boost everything, and therefore they like the idea of buying into a potential Fed rate cutting cycle. Whether or not this lasts, who knows? But at this point in time, this is a market that's very much in an uptrend, and it's difficult to argue that. I don't have any interest in trying to fight the trend at this point in time because it's so strong. And therefore, I look at this dip as a potential buying opportunity, but I would do so cautiously. I wouldn't jump in with a huge position right away. As momentum starts to swing in your direction, then you can start to have the argument of buying more. But right now, I think you have to look at this through the prism of a market that, quite frankly, got a little bit of a shock, but it's also got PPI to look to on Friday. And if that ends up being hot, because we've seen that happen before, it'll throw everything back into disarray, and then we'll just do what we always do, and that's chase a handful of stocks on Wall Street to drive the index higher. Remember, it's not an equal weighted index, it's an ETF of about 4 or 5 stocks, and it will remain that way as long as ETF trading is such a big deal, and there's a lot of money to be made in ETF trading, so I don't see that changing. And then, of course, as long as it is not an equal weighted index. It never has been. So I still think at this point in time, if Nvidia, Microsoft, Apple, all the usual contestants are doing well, the S&P 500 does well right along with it.